Dell reported decline in second quarter profits and slashed its full-year earnings forecast after the close last night. The focus today will be on the release of the FOMC meeting minutes this afternoon. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. Yesterday, markets hit a fresh new yearly high before giving up steam. The Dow and the S&P both ended the day down about a half a percentage point. Scott, what's this mean for going into trading today?
Well, it all depends on your time frame. Depends if you're a macro investor, an intermediate trend watcher, or someone who likes to play momentum, because the momentum's been there and we've been tracking it very closely. And we've talked about two different trends. We've talked about that intermediate trend and then the accelerated trend. And yesterday's push through failure into the highs is something that momentum traders don't want to see. It gives you an excuse to go from just say like I had 9 longs on to maybe 3 or 4, clean up some excess positions and also measure your commitment, because at that particular point, gears can change, and it may pay to be a little bit more flexible as you see that type of candle get put in place.
Why don't we take a look at the chart to see exactly what's going on? Okay,
well, let's take a look at the SPX. The SPX, which is the S&P futures, great gauge to watch. As you said, we pushed through the highs of the year. This was 1422. So as you can see here, we pushed through the highs and then failed to hold it. So a momentum play turned into lack thereof. So if you're playing for momentum, you do not stay there. But what you also see is we closed near the lows, and we also closed very close to what I've been putting in place here is this accelerated uptrend. If you want to take a step back and see, where we are, from a broad base, you see that here's your October low, and then this was your June 4th low. And since June 4th, we followed a nice methodical uptrend where we're not even in the midst of testing, because that comes down here. But recently, we've been following this accelerated trend. So for guys like me that could push buttons fast and take advantage of short-term quick moves, I get out of most of my longs. I'm actually entering today a little net short, and if we break and close below 1410, I do think that perhaps over the next week or so going into Jackson Hole, we could see a move to retest the 21-day moving average, which does come in somewhere around this prior breakout, which is about 1390 to 1394.
Now, Dell came out last night. They had an earnings decline, and they slashed their full-year guidance. And then also later today, we're going to get the FOMC minutes, like you mentioned earlier. How is this all going to impact trading today?
I don't think Dell's going to really impact trading. It's unfortunate that they never switched gears. They never created more innovative products. I used to trade Dell back in the day. And they don't have a tablet, they don't have a great phone. All they have is laptops, which are becoming obsolete, except for a while underdeveloped nations started to get more computers, so they started turning to cheaper models like a Dell or maybe a Hewlett Packard or whatnot. But now with the age of the tablet and everyone going handheld, and Dell doesn't have one, even though the stock is here, if you look at the chart, doesn't mean it's a necessary bargain. That's what we tried to talk about the other day. So at this point, can it be priced in? Maybe. It's opening down, and I would say use this 1139 as major support. If it opens lower and tries to fill the gap and closes positive, maybe it's priced in and we could see some, decent action moving forward. Or, if it doesn't, it could set new lows in the year and become a single-digit stock and then need a takeover down the road, kind of like RIM.
Yeah, it could be. Well, in the sector spotlight, we're going to take a look at some of the different sectors and see where they've traded on this reversal day yesterday. First, we'll look at the SPY. It's very similar to the SPX. So what are you looking for here? What are the levels in this one exactly?
Well, this one's good to look at because intraday, a lot of active traders use the spiders and they don't trade the futures, some do. So here on the spiders, very similar chart to the SPX, but it's a different vehicle. And here, this actually was a little bit above it beforehand, and then it pushed through and failed as well. The level here that I was watching was 142.30. It pushed as high as 143.09, came back in. At this particular point, you do have this trend here as well. You also have the 8-day. So the last breakout we had here was somewhere around 141.30-ish. So if we were to break below 141.30, you could see a move to retest this 139.50 to 139.73. And, it's not a lot, but it's still a 1.5. So if you want to save yourself that kind of move, you could do so, especially, if you're an active trader looking for cash flow. Better to be short for that move versus, sitting there and holding your nose and going underwater, which also guys are talking about a 15% correction, a 20% correction. All the bears are starting to growl because they had their first down day. Let's see if we can go to 1390 first or 139 before you start saying we're going to head back down to much lower levels.
Yeah, take it day by day.
Exactly.
The Russell 2000, now this one, it's been a laggard lately, but yesterday it ended the day flat, which was better than the broader averages. How do you expect this one to act today?
This had a nice move. It broke its downtrend, and sometimes you come back and retest it. So we need to see whether or not it gets retested and it holds, or retests and fails. So if you look at the IWM, you will see that last recent tradable move is when it broke above this area, broke above 80.42, went as high as almost 82.71. So kind of pushed through, couldn't hold it. So at this point, watch this 8-day moving average. If it can't hold higher here, this too could come in and test the 21-day, which is about 80.03, and that would be a healthy spot to hold.
Now the iShares Real Estate ETF, this one's been consolidating at higher levels. It's trading above all of its moving averages. It's had a nice methodical move up all year long. Is this one that you could maybe buy on a pullback?
Well, we shall see. The same thing as everything else. If
yeah.
Some things you could play for momentum, buy strength, and some things you just get frustrated, like even the banks. This one, you take a look at the chart. It looks okay. It's kind of has both moving averages getting close together here. You also have a bit of an uptrend right here. So at this point, if it were to break this area, it could easily come in and retest this gap. And I think for this to be healthy and constructive, it should hold at least 63 if we do get this type of pullback.
Oil has had a good run off of its June lows. It's also trading above all of its moving averages. What's a good game plan for trading this going forward?
Well, the OAH was a laggard group, and then it gapped up and it changed composure. We talk about those gear switches, and it was one then, and I don't see it yet, anything damaging. You look at the chart here of the OIHs, and this is that low that we talked about, and then you had that gap up right around here, and I talk about gap strategies, and it never came in and filled, and that was your entry. And then since then, it's been holding higher the whole way. So if you want to, draw a little bit of an uptrend from here, it's still holding the 8-day. I guess another accelerated one would be here. If this breaks below 41, just like everything else, you could test the 21-day and test this average right here. So at this point, you stay with it in a tier 1 if you want to be an investor there. For cute shorts, if it breaks 41, maybe you get short for a move down to 39.45.
The AGS, the MOO, M-O-O.
Right, it's funny, right?
It's had a good recent move up. Do we need to see a little bit of consolidation before maybe some more upside in this?
Well, this one, out of all the candles from yesterday, this is one that closed closer to the lows. So it's a little bit more bearish than the other ones, but we don't want to read too far into it. If you look here at the chart of MOO, which is a great name for the AGS, look at this. It pushed through and then failed. So this tight range where shorts got squeezed, people paid higher. They said, you know what, it can't hold here. So you just take a little notice, but it's still above the 8-day. I would say if you want to show a really tight pattern here, if this were to start breaking below yesterday's low of about 50.46, it can come in and test the 49.48 area. This has been really nice also ever since the low. You had a small gap up right here, and each level you've seen some commitment. So at this particular point, day to take notice, need to see what it leads to. It's had a nice run, so we'll see if it resets up.
Well, now we're going to take a quick commercial break, and we'll get back into the trenches after this with some of the leaders.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission. 2 free tickets. Come down and expect to have a great time.
Welcome back. We're going to get into the trenches with some of the leaders that turned negative yesterday. First, we'll start with Apple. It probably wouldn't be a morning call if we didn't talk about Apple. But all being serious, this company, it became the most valuable company of all time earlier this week before it was downgraded by Oracle Investment Research yesterday, which helped lead to its 1.4% decline yesterday. Now, Scott, you've been trading this for about 3 weeks now. Would you say that this pullback was overdue?
I've been trading this my entire career, but the most recent 3-week move that I tried to be long, I exited not yesterday, the day before. You know, I always like to sell into strength, and you know, the market always likes to punish chasers. And then yesterday we came in the day, Apple was up $3-4, and guys were getting very excessively bullish. And I'm like, listen, if you didn't buy the last strategy through the highs of 644, you have no right buying 668. I don't care if it goes to 700 in the fall, you're not entering it correctly. And then lo and behold, by 10:30, you saw a divergence in the futures. A lot of guys actually got short around 670, and pow, your first potent down day. You look at the chart here, you'll see, you know, it opened above the previous high, closed near the lows of the day. Small day to take notice. Now the question is, what's it going to lead to? So trading Apple, I like to look at the past of Apple. So there are 2 days that happened in Apple's move this year in February. Look at this day. This was a day to take notice. This day was on February 15th. What happened was it traded through that low. The next day did a red dog reversal and then just inched up, made new highs, and just had a nice climb higher. There was no big deal. This was another outside day right here. I remember it very closely, right when it put its high in at 644. Next day tried to hold, and then it broke lower, and then it, you know, for 2 months it was in a downtrend. So the question is, what type of move lower are we going to get with Apple? So you have to measure it closely. I think if Apple is going to just pause here and not have any real downside, I do think that the prior high, which is right here, right, 644, put in there with the 8-day, about, you know, which is now around 642. I think this area should hold. So 640 to 645, if we see this in the next few days, that's the dip I'm going to buy. First point of reference is yesterday's low of 650.33. If it could hold here and go sideways, then it's really strong. But I do think, you know, it's going to need some time to, you know, to get rid of this potent down day, and then we'll see what happens moving forward. And that'll also be, you know, clues to whether or not what type of pullback this market could have based on, you know, if we do get real downside in Apple or just, you know, healthy digestion.
Now, Google yesterday, it had a hard time breaking through the resistance of the new high that it hit on Monday. Also, there seems to be a short-term descending channel forming there. So could there be more downside here? What level would you expect it to hold?
Well, Google's had a big run since earnings. You know, it gave you like 3 viable price points. It went through the year highs, and it traveled a long distance to get there. So to me, it's not as important that it holds, because it didn't hold yesterday, the highs of the year, just because of where it came from. So for me, I'd like to see a pullback. I'd like to see 648 to 652 hold. If you look at the chart, this is where I would try and get it for a swing trade. Okay, if you remember this last move that it had on this gap up, you know, it was pretty powerful. So right now, kind of broke this upper ascending channel to the downside. You do have a point of reference right here, the low here being 659, but I think this could be a little premature. I think, you know, we pull back, we tested the 21-day moving average. By that time, it'll probably be right around this gap. So I think somewhere between 645 and 652, this will be your buyable pullback in Google for then what should be a huge move into the end of the year or into the beginning of next year, which should take it back to, you know, the monthly chart and, you know, a test of that 747 area. But short-term wise, you know me, I trade the trends, and I do think I could be cute by being a buyer right in here, and we'll see what happens.
Okay, not a bad strategy. JP Morgan, this is a bank that had a good day yesterday. It was up 1.8% in the down market. It seems like it's trying to close the gap that happened when the London Well trading debacle happened earlier this year. But is it going to have what it takes to really fully close it?
Well, it did a big portion of it yesterday, and it was pretty exciting. It happened fast. That's why traders love when stocks go in gaps, because it's quick action. Now, the key here is to always enter these banks correctly. Now, on Monday, when the market was weak, I was like, you know what? I'm not in JP Morgan. It's showing relative strength with other banks. I'm going to buy it. So yesterday, I got paid for holding it overnight, and then to the extension was able to sell a big portion of it, and then I trailed some, and then when the market failed, I just said, you know what, I'm paring down. For an investor, I think you stay in tier 1 macro long, but we've talked about that probably a month ago. But as a trade, if you look here at the chart, you will see this was the relative strength that we saw right on this day on Monday. Okay, that was your entry. You know, and then you got paid as it went into the gap and tried to fill a big portion of it, and it was up a nice percentage. It hit as high as what was that, almost 39-ish, which was about a point through that gap. So, you know, I sold some strength. I got out of some. At this point, if we do get some type of correction activity, here's your 21-day. I think you could enter, or as a trader, I'll look to maybe buy somewhere closer to like 36.50-ish, 36.74. As an investor, if you're not in there, it's probably a good spot also. I think you could hold a tier 1 in some of these banks. If we're going to get a fourth quarter move, some of the banks are going to participate, and I think you could have some.
Now, Walmart, this stock has been trading down since reporting earnings last week when sales came in short of expectations. The stock seems to be gaining support around the 50-day moving average, but you think we could see a little more downside since it has had a really good run this year?
It's so funny. People were like saying, how horrible the action in Walmart is. I'm like, you just missed 62 to 75. A big move. Don't take it into earnings. It's going to have to be unbelievable unless you're a real long-term investor. And we talked about objectives. The objective we had was 74 to 77, went to 75. Big move. Everyone started talking about it at the highs, as normally what happens in the media. P.S. You had the earnings gap down. It didn't fill that gap, so no matter what that stock is, it doesn't matter. The strategy tells you you should continue moving in that direction. If you look here at the chart of Walmart, you will see here's when we liked it, here's when it broke above this 62, and from there you had a really nice move all the way to the highs of 75.24. And then it wedged, right? It wedged right up here towards the highs. Here was your earnings. So if you take it into earnings, that's your risk. Most traders like me did not. Then you had a gap down. And then what you want to do is you'll want to look in the days after the gap to see if it fills it. Do people think it's a lot cheaper after the gap versus where it was before? And right now the consensus is saying no. And then yesterday with the market getting weak, it closed on the lows, closed on the 50-day. I think there's a chance that Walmart hits 68. I'd rather see you be a buy around 68, and that'll be a nice buy the dip for them. What could be another move, later this year moving forward. But for right now, it's actually in a void.
Well, Target, on the other hand, ended the day yesterday up 1%. It's trading above all of its moving averages. Could this be the value-oriented retailer that can stay strong in a weak tape?
Well, this one, the move has been really nice as well, and there's been a time and place to buy it. So with Walmart, diverging, it's going to be, I think, a little hard for Target to continue to go, but until it changes, you can stay with it. And if you look at the chart of Target, you will see that this was when, we talked about it earlier. This is when the downtrend broke. This was your pivot buy in Target at 53. Then it came in again. And then we talked about this descending channel right here. This was another buyable spot. And then, gapped up after earnings and then filled it, which isn't always that bullish because you want to see that gap being protected. So that took some of the speed out of the way. And now if you take a closer look here, I would say if you want to have a high level stop in Target, you could easily put it right here. Which was Monday's low, because yesterday it did diverge. It's showing strength. It's still riding the 8-day. It's still, in this uptrend. So at this point, Target you could stay with. But again, if you're like 1 foot in the door, 1 foot out the door, and you want to have a high level stop, 60. What would we just say here? 63.50 is your stop, but just be prepared that if you get out of it, and you're a macro investor, you might not get back in it. So just know your time frame.
All right, fair enough. Okay, let's do some quick hits. Urban Outfitters, they reported earnings after the close on Monday that were much better than expected. The stock was able to hold up 18% yesterday. Is it going to be able to have another update today?
Usually these guys need, like a stock that has a gap like this, which is a pro gap, needs 3-4 days in order to consolidate it and then see if you can move higher. So if you're not in Urban now, at least you have a new point of reference. Okay, you can look at the chart. It's bullish that it held the majority of the gap. So if you want to draw your lines, this is what I would draw here. Here's support. Here's where the gap starts. This low pivot is 35.91, and then you have the high here of this move. So I would say it's going to need a lot of time to digest what just took place. Give it some time, and then after that, I think as long as it holds the majority of this gap, because sometimes you don't hold the whole thing, sometimes it works its way down, and then you look for some type of red dog reversal. That's an entry, and then it goes back up, and then the momentum level's there. But for right now, I think it needs some time.
Silver was up for the second day in a row yesterday. Is it changing its character here?
It's trying to. Monday, I've been in it for a few days just watching it. Then Monday, it finally ignited. Yesterday, it gapped up, so you got paid for buying it on Monday. Now it's kind of opening flat. So what I think for guys like me to stay with this trade and not be too tested, take a look here. I think a decent sized portion of this gap should stay intact. It gapped up yesterday, held a decent amount of it. I would just like to see some of this gap hold. It doesn't necessarily mean you get stopped out if it goes into it at 28.31, but I would say somewhere around 28, it would be a level to make it very easy to hold here. If you take a closer look, here was your nice entry. I think I was long on this day, held through this, and then added here. And then yesterday sold some strength, because that's what I do. I sell some strength, and now I'd like to see this area hold. I'd like to see 28-ish hold. If that holds, then maybe you buy a little bit more, and then we get a move to the 200-day. And I'll just talk about gold because it's right here anyway. I'm long gold also, and this one, unfortunately, you have to take risk with this because I bought it yesterday, not yesterday, on Monday with the strength in silver. And if anything you bought yesterday, you really didn't make money on. You had a gap up and it did nothing. And the 200 days right there. So same thing here. I think for momentum guys to stay involved, we're probably going to want to have a nice easy route here where it holds the majority of this gap. It could come in a little bit just to shake things up. So I would say as long as it stays above around 158 and holds a decent portion of this gap, you'll see momentum in there, and then maybe it changes composure and continues. So right now, I'm long, small, both, and I'm going to see if they could prove that momentum's going to stay here, which momentum hasn't stayed here, for months.
Then one more bank, Goldman Sachs. They filled the gap from early May, but yesterday we're flat. So would you be a trader of this name?
I think what you just said is very important, being a trader of this name, because every time it tries to break out, holding and closing on highs has been a rarity. And I know Mark was focused on this yesterday, and he started buying a pullback, and then Goldman Sachs went right in and just never bounced, and it was frustrating. But if you look at the chart here, you'll see that it is a bank, and buying banks on strength has been difficult. This is the last tight pattern here. If you look here, it tried doing it this day, which was frustrating, and then finally, gave you a nice breakout, I believe what was Monday. And then on Tuesday, it opened up and it traded near the lows, but it's still above the 8-day, it's still above the 21-day. So granted, it wasn't a momentum type play, but you put it in perspective where these banks haven't been momentum plays, you have to buy the dip, and the dip right here for this one would probably be somewhere around 103.5.
Well, those are the stocks we're looking at, the sectors we're looking at, and the levels in the S&P that we're watching. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.